Manappuram Finance joining us this morning. Remember, the stock is actually up over 100% from its October lows, and and they're also, of course, looking at the IFC to invest $35 million, which will be the first investment in an Indian gold loan NBFC. So let's discuss the outlook ahead with Mr. Nandakumar, who's joining us this morning. Mr. Nandakumar, thanks so much for being with us. You know, in the current environment, of course, everyone has been focusing on how things are looking quite difficult for NBFCs. You've managed to double from October lows. What's particularly contributed to the performance of the company? Are some of those factors still on track? Just talk to us about the situation as you're seeing it and how it's impacting you on ground.
Yes, as you have said, the liquidity situation in the NBFC sector is acute. But companies where the ALM is positive, these companies don't face much problem. In our case, the asset matures, our major assets are coming under as gold loan. These gold loans mature in around 75 days, whereas our average borrowing is nearly one year. So because of that, we don't face any ALM mismatch. So our liquidity is comfortable, as well as our capital adequacy is very high. Because of that, we are continuing to get our CPs renewed on time without much difference in the rate of interest, and also we are getting fresh sanctions from the banks, apart from the other banks who are already lending to us are giving timely renewal. Because of that, we are able to maintain our performance as projected. So similarly, our second major focus area in business is microfinance through the subsidiary. There also, as it is the highest CRISIL rated company, as it happened to be, they are also able to attract sufficient liquidity. So the business is going as usual without much interruption.
Wanted to understand IFC's role, Mr. Nandakumar, because as we understand, they've recently invested about $35 million in your company. Wanted to understand if this is a secured loan by IFC with lower borrowing cost, and is there a case for IFC to invest further into the company?
Yes, their in-principle approval is for $75 million equivalent. So the 35 million is already dispersed yesterday. So they wanted to service certain sectors, especially in flood-affected areas, and also where there is a stress, etc., etc. So they have studied how the gold loan utilization, how it can be helpful for the inclusion, financial inclusion. So after around 1.5 years study only about the end use, etc., etc., they have sanctioned this loan. And with that, we are building a case for other multilateral lenders also, and we are seeking finance from them also.
What happens to your gold business when gold prices shoot up suddenly 10%?
Naturally, the loan to value will go up, which is helpful for the growth of the area. So it will definitely help the company to improve the profitability.
Increase because one side is AUM goes higher, that's a natural uptick largely because of the asset appreciation. But in an uptick in gold prices, does the underlying gold lending and gold borrowing activity increase?
So no, that may not impact, because this gold is only a collateral. The money requirement is different. So the price of the gold that doesn't impact the increased borrowing. But certainly, sometimes it can happen because some of the borrowers, not all, some of the borrowers may be requiring more money because for want of collateral, they may not be able to draw as per their requirement. In such cases, there is an opportunity for higher borrowing by the borrowers. But majority borrowed depending upon their requirement. There, the price of the gold may not impact the business growth.
You mentioned that your ALM completely is mapped. So could you give me a broad sense of your current lending? How much is coming from banks? How much is coming from mutual funds? Are mutual funds ready to give you more? If not, yes, will you be going to banks and will you be able to fill that gap?
Yes, our CPs are around 25%. So a portion of that is coming from mutual funds, and the balance is mainly coming from insurance sector. So we are borrowing at a rate below 7.5%. It continues to be like that. The balance around 50%, 55% is coming from the banks. Banks including the multilateral lending institutions like IFC, NABARD, etc. So NABARD also has sanctioned us 700 crores. So the balance 25% is coming as bonds, which includes the NCDs retailed last year, and this year also we are planning to retail NCDs, and institutional placement of NCDs are also there. We have the plan to go for an external commercial borrowing. We are engaging Moody's for rating the debt program. We hope we'll be able to raise some ECBs also in the near future.
Okay. Could you just expand on that, Mr. Nandakumar? What exactly is your total capex requirement or funding requirement?
This is not because we are in need of working capital. It is not capex, it is a working capital requirement. But in fact, what we are planning to do is to broad base our borrowing. So this is a new channel. So in the event of a liquidity issue, if we have different channels, it will be easier for us to manage. That's the only reason why we want to go for an ECB.
Okay. Closing comments. How has the slowdown affected your business?
The slowdown has not much impacted our business in the sense that we are going as per our projections for the year. So far we have not been impacted.
That whatever is happening in SME or autos or the consumer durable, the basic categories which are retail dominated and SME dominated, you've got no effect whatsoever.
Yeah, our projections in this area is not very high. We have projected some 30-40%, etc. because as the size is very small, the absolute amount is not very large. So that projection would be achieved. That is the trend what we see in the present circumstance.
Do you expect the demand and liquidity to come back around festival season, or right now we are going to be in this state of slowdown or shock or limbo till December?
I think it will come back because now slowly the market is distinguishing between the companies where the liquidity challenges are acute and the other companies like retail lenders where the liquidity can be managed. So majority of the companies are retail lenders. Long-term lenders like HFCs and the infrastructure funding companies, these are the long-term lenders. So the short-term lenders will be able to manage the liquidity issue successfully. And once the confidence, I hope soon the confidence will come to the market, come to these lenders. Thereby, they will find a solution to manage their liquidity well.
Joining us this morning, Mr. Nandakumar. Always good getting an update from you on how things stand. All right, that's the Manappuram Finance Management speaking to us on both, what's happening on the NBFC front as well as the impact of those gold prices.